Thank you for joining me. I'm Alex, and I want to talk to you about Nvidia. So Nvidia is a producer of graphics cards, and they produce the highest end graphics cards for anything for gaming, data centers, general purpose computing, which means that there's a lot of scientific applications, and the bigger the computers get, the more graphics cards are in there now. It's pretty crazy. And that is also why their revenue keeps going up, especially after the recession. No one really wanted to invest in a lot of their server farms. So a lot of that got postponed, which is why they're now growing pretty heavily. So their price is $158 right now, which is down from $281 about a year ago. But they're doing fairly well right now, up 2.8% today. Today was a pretty good day in the stock market, so that doesn't necessarily mean a whole lot, but a win is a win. So PE of 29.87 or 30, whatever you want to call it. Fairly high, obviously. Not necessarily a stock that you should be buying based on PE alone. There needs to be significant growth behind the company for you to buy a stock with a PE that high. So they do pay a dividend, but it's a fairly meaningless dividend of 0.4%. So a fifth of what you can get in the bond market. So I don't really get the point of that. But total assets, $13 billion. Total liabilities, $4 billion. So the balance sheet is looking pretty great, even greater than a company like Amazon or, any of those huge growth companies. Annual growth of 25% or more. So they, in year over year, they grew about 25%. Before that, they grew significantly faster. So over the past 4 years, their growth looks pretty amazing. The 25% is actually their lowest year in the 4 years. So, it is slowing down slightly, and that might be why the price is actually down that far. But, 25% growth on billions of dollars of revenue is fairly significant. And the profits are growing actually faster. And by actually faster, I mean 150%, 100%, and then 30%. So all of that is extremely, extremely good. So obviously the PE of 30 doesn't actually look that high considering the huge growth that they've had and are probably continuing to have. Now, a recession could obviously slash all that in half or worse. So, is Nvidia a recession-proof company? No, definitely not. There is nothing that they produce that will continue to be bought in a recession. So, there is no one that has to upgrade their servers, infrastructure, graphics cards, whatever, in a recession, which means that their growth is going to significantly slow down. They're going to have to cut back a lot if there's a recession. Most companies do. It's not necessarily something that you should be overly prepared for, but the whole crypto market, which has gone up and down and up and down as it always has, but it has stagnated significantly over the past year and a half, 2 years. So they got a lot of growth from that crypto boom where you could actually make money by buying a graphics card and just running your computer 24/7. And that is no longer the case. The electricity costs alone in most places will significantly dwarf whatever you could make with crypto generating. The whole mining thing, I explained that somewhat a little bit in the Bitcoin video. Anyway, so the growth does not necessarily have to continue, which is a big problem here, and is also why I think that the PE is slightly too high for me to buy it. Obviously, the dividend is almost meaningless. So, should you buy it as a value investor? And the answer is no. Should you buy Nvidia as a dividend investor? The answer is also no. Should you buy it as a growth investor? And the answer is probably yes. Because risk tolerance is obviously far higher, and the outlook is much more long-term. And the long-term outlook is something that is the best about this company, because there's one competitor in the market, which is AMD, and Intel has tried and failed so many times to get into the market, and there is nothing else on the horizon. So they have one main competitor, and that is fairly well understood, and they continue to be ahead of AMD, but then so was Intel. So there's some risk there, but over the long term, there's really nothing else coming. So I think as a growth investor, it's definitely a good stock to look into, do your own research, see what their long-term outlook is. I don't see the market with data centers and servers and scientific applications to slow down. So as a growth investor, I think it's a good stock. Definitely something you should look into. If you want more videos like this and you haven't subscribed yet, make sure you do that. I'm coming out with more videos every day before market open. I hope you have a successful day.